Hello, we will be going over Form 706 together, and if you want, you can pull up your own copy of Form 706 you can pause this video, then come back and let's go to that Form 706 together. Your job is to prepare the end product, which is the Form 706 on your midterm, and I expect Form 706 to be as complete as possible. A list of what should be attached to the return, but not the actual attachments, should be included because I will not be reproducing the documents to include in the attachments. But we want the return to look as complete as possible. When you complete a Form 706, and I have a copy here, we're going to go through some of the schedules and various pages of the form. You're telling the decedent's story, but it reflects a snapshot of where the decedent was at the time of death. It's important to be complete when you prepare them. The starting point is to determine if a return is required. The first step is to determine if the gross estate, which is gross estate tax, I should say, on line 8, which you can see here, exceeds the required exclusion amount, and you can see the exclusion amounts computed here in section 9. But when you compare those two numbers, it still isn't quite that simple. There are adjustments that have to be made, and the adjustments to the exclusion amount are in the lines that follow the basic exclusion shown on line A. And those adjustments are the adjusted taxable gifts, which are the post-76 gifts not included in the taxable estate. We have to reduce the applicable exclusion for any exemption that was taken after September 8th, 1976. And what I'm discussing now is shown here on line 10. In the 76 Act, they went from an exemption to what we now have today, which is the unified credit. When they made a change in the law, going from this exemption to the unified credit that we have today for the period 9/8/76 to the end of 1976, if you used your exemption, you had to reduce your credit by 20% of the exemption you use. So that affects our applicable exclusion amount. And that's why you see this adjustment that needs to be made. Whether or not you have to file a Form 706, depends on the amount of the gross estate, not the net estate that generates an estate tax. If we add back the exemption that we talked about not too long ago, that you use post September 8th, 1976, as well as your adjusted taxable gifts, let's see where that is, on line 4 to your taxable estate on line 3C, if that amount exceeds the amount when you take your taxable estate and the adjusted taxable gifts, if those two amounts exceed your applicable exclusion amount, that's on line 9C for the most part, then you know that you're going to have enough to require you to file a tax return. So that's just a quick way of trying to gauge it. Not so quick, but at least before you go through everything in all the schedules. So basically, the filing requirement is the function of your gross estate. Now, in addition to that, if you have a situation where you have a deceased spouse's exclusion amount that we want to make available to a surviving spouse, then the Form 706 has to be filed for that reason as well. You may already have a filing requirement because of the size of the gross estate anyway, but even if you don't, if you want to have the unused exclusion passed on to a surviving spouse, then a Form 706 has to be filed. You have to calculate what that unused exclusion amount is, and you have to make an election. Now, on the Form 706 itself, it consists of 4 basic pages. So right now we're on page 1. Here we are at page 2. You know, if you go through the form, you should have one hopefully in front of you, and then you end with page 4 before you start going to the supporting schedules. And it's followed, like I said, by those schedules, and it's on the first page of the Form 706 is where the actual estate tax liability is calculated. Now, page 4 of 706, and let me have to navigate through this, trying to give you an example here. If you go to page 4, it's where you see this calculation we talked about regarding the portability of deceased spouse, spousal unused exclusion. And this is where the election is made. So the form itself actually requires an election if you're opting out. Basically, if you don't want the unused exclusion made available to your surviving spouse, then you elect out. And you do that in this particular area on page 4 of Form 706. Now, if you fail to do anything within that regard, you have the effect of electing in. So be careful. So if you have to file your, because your estate tax is of sufficient size, or if you want to make the unused exclusion amount available to your spouse, you're going to have to file a Form 706 as well. Given that you have to prepare a return for the midterm exam, then let's take a few minutes to talk about the Form 706 and what it is that you're actually doing. So let's start with page 3 and try to go here to give me a moment to navigate through this. So if you look at page 3, you'll see that there are a lot of questions that are listed. And you're going to get questions throughout pages when you get through page 4, actually. And there's also questions on the schedules. The questions on page 3 are questions designed to identify the type of things that might be required to require an inclusion in the gross estate. So you want to make sure that you answer all of the questions. There are questions of that nature on a number of other schedules as well, so they're not limited to just those first 4 pages. Again, if we start on page 3, if you scroll down, or you can just look on your copy, but if you're looking at the screen here, if you scroll down to the section that says Part 5, you have in this section the recapitulation, and you'll find that a lot of the items listed here are the items that we've been talking about during the semester. So at the top part of the recapitulation, it identifies the gross estate basically. And so these schedules A through I, which contains the real estate, property, stocks, etc., it includes, if you look at schedules A through I, which are attached behind these first 4 pages of the Form 706, it includes all of the assets that are required to be included in the gross estate. And you'll notice that to the right, you'll see that there are 2 columns. There's an alternate value column and a value at date of death column. And as you might be aware, the alternate value column is used to report values if, in fact, an alternate valuation date is elected under Section 2032. If you're not making that election, you don't need to worry about that column. And if you look at the schedules, say Schedule A, I need to move to that, you'll see also that an alternate value column is listed as well. So here we are at Schedule A. And again, you would need to put down, if you have an alternate valuation date, then you would need to put down that value at the date of death. Again, these columns are only used if Section 2032 election is being made. So do not worry about this column unless the election is made. And let's think about that in terms of our midterm. Is there a Section 2032 election being made? What does it take to have a Section 2032 election? Well, the effect of the election has to be to not only reduce the amount of the gross estate, but also to reduce the estate tax liability. So, for example, if we determine that there simply is no estate tax liability due to the way the estate is set up, then the possibility of the Section 2032 election doesn't exist. You can't make the Section 2032 election unless the effect of the election is, in part, to reduce the tax liability. So I'll just leave you with that to consider what I'm saying. Now, let's go back to the recapitulation, and that should be at the bottom of page 3. Part 5, here we are. And again, you'll see these schedules A through I, and if you add all of these amounts together, as I mentioned before, these are the amounts that are considered the total gross estate. And this gets carried to the first page of the Form 706. And schedules J through O are for the various deductions that are available, and you can see them listed here. And the amounts in the recapitulation flow up to, again, Form 706, page 1, lines 1 and 2. The recapitulation gives you the gross estate that flows back to the first page of the 706, and items 12 through 13 here relates, it has the exclusion factors that you need to again, flow back to page 1 of 706. So between them, we've just identified our taxable estate that is shown on the 706, page 1. This amount here. Note that the state death tax, however, that's listed on line 3B is not in the recapitulation. If you look at the structure and sequence of all of these items on the 706, page 1, you'll find that the sequence is very similar to the materials we've been studying leading to the preparation of this Form 706. Now, remember that the taxable estate on line 3C is the amount basically being subjected to tax. And yes, we add back the adjusted taxable gifts, but if you go back to the week 2 lectures, what you'll find out is that all that is being taxed is the taxable estate. So I'm going to end right here and pick back up on another video, which will be part 2.